Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today was Fed Minutes Day, and what we tried to talk about, which was interesting, that 30 days ago is when they met, right? They're not meeting right now. They're not talking about the market environment right now after seeing the overseas market deteriorate or our markets pull back from the highs. This is when it was July 31st-ish, when we were about to break out, and why wouldn't there be strong taper talk conversation, which is what the Fed minutes basically said. So either way, Fed days are tough. And at first, they pushed below the pivot point we've been talking about, and they pushed above the pivot talk, point all the way to the highs of the day, and then back towards the lows of the day. So you treat it two different ways. If you're actively approaching it, you just use that level as your, almost like craps, don't pass line. But you have to do it with a small amount of size. Otherwise, you're not going to be able to be as flexible. And there are just some days when you have to be, low gross, low net in order to stay safe. Because at this particular point, we don't know where we're actually going to go. And we talked about being in no man's land, right? Below the 50-day, but above the 100-day, below the accelerated trend line, but above the macro trend line. So lots of unknowns. So when you have lots of unknowns and it's August 21st, all you try and do is make a little bit of money and you stay out of harm's way, because we've had clear-cut patterns that were more definable and tradable in the past few weeks, or the past even, since July, versus right now where it's still, a tricky, pretty much time. So if you look at the chart of the SPX, this is what I'm talking about. All right, over the course of this year, we've had a lot of different tradable moves. Okay, first, this was the red dog reversal that started in November. This is when the market ignited, okay, to start the year, and that's what ignited this accelerated trend line that we were following all the way until, what was this date? I posted this chart on Twitter, June 20th, okay? What was the clue to get out of some stock or to potentially take risk down? That was right here. Right, that was this ascending channel that got resolved to the downside. And with that said, remember when we broke below this 1640 here, bounced off the 50-day, and then that's when we sliced it. Okay, from there you had to move to about the 100-day, which I'll put in right now, which wound up being buyable during that corrective phase. Okay, I think the bulls have been very spoiled because you do have corrective phases. It's natural and it's actually constructive. So anyway, that was right here. So let's take a closer look. This was when you had your outside day. This is when this trend got broken. Okay, bounced off the 50-day, and then boom. And within this was we call a breakout failure, which is never good. That was right there, if you remember. Then we sliced through the 50-day, and that was the 100-day. So from there, here was your reversal. Here's where it cleared the pivot, and then you had a nice move all throughout the summer. And then look what took place. The head and shoulders top, the left shoulder, the head, the right shoulder. Remember when we took back 1698, that was your sign to take some risk down. You have to take all of it down, and this is also just from an intermediate time frame. Then we broke below 1698, and from there, the bears actually protected it. Look at that. For the first time, it protected it here, kept it below. Remember those other pivots that we had? Didn't happen that way. Okay, real quickly, just to show you the difference on how you measure it. Remember this pivot? When just say we broke below this pivot, held support, rallied, held higher, and penetrated. This breakout failure, remember that one? That gave you a little bit of a correction, bounced off it, held higher, and continued. So the question was, during this upper area, what would it take place, right? What would happen here? You broke below, you hovered here. Was it going to break back above and continue the trend, or was the bears going to defend it? And that's what happened here. And then you had this, closing the low on that Wednesday, before we went out with saying, in my humble opinion, I see the 50-day before new highs, and that happened quick. And now we're kind of groping, I'm not going to use that word, we're trying to look for some type of low here. So what did we talk about? What do we know? Okay, we know that we had this area as a defined 2-day support, and that was 164 or 1645, 1645. And then today we were below it and above it. Okay, just to show you on a more micro, pattern here, this was really tough, guys. Okay, and how could you have dealt with it? It all depends on how you wanted to. You go to your 5-minute chart and you'll see that it was very. Let's see. This is the gap down. It was very tough. Okay, here is Oh, we just lost. We didn't get our data for the rest of the day there. So anyway, let's see on the 8-minute. Do we get it? No. Okay, so let's just go back to the daily. So anyway, it was very erratic. And at this point, where we closed, no reason to take excessive risk. Here's the 100-day right here, which also lines up to a pretty big gap, which is 163.47. We'll see if we do pull into there, how that works. And ultimately, this gap, this pro gap, still controls the market to the downside. So no reason, again, on August 21st to be a hero, especially after what's been a very methodical year. And when things are in, no man's land, no reason to just, put yourself in harm's way. Maybe take some paper cuts because a gusher is not necessary right now. We talked about some things showing some relative strength up here. You want to take a quick look at Apple. Apple did hold this upper area. We'll see how this handles this tomorrow. Tried to be strong, gave way in the end of the day, but still looking really good up here. It's been acting better since earnings. We all know that. Google tried to have a second day, and then Google did what Google always does, held up and then came in, and it's been pretty out of play or lethargic ever since this breakout failure here. I guess trade versus here, but ultimately very hard to deal with intraday. It doesn't have much continuity. Amazon is still trying to hold around here. It now just created a lower pivot that if you were trying to trade it, because it was holding 285, I would be very careful here. This was your breakout failure on earnings. Since then, a sell signal. Whenever something tries to break out and comes back in, it means it's not ready. If you were playing it for a breakout, you get out of the way. If you didn't get out of the way there, once it broke below 295, that was your out. And now it did seem like it was trying to hold this 285, but not really getting much attention, not much traction here. So if it were to break this, it seems like it could hit this 277, so just be careful. Tesla, also a strong stock, but it was 4 up days in a row, so we talked about it being an A play holding the 21-day. That was here. Now it's, I would just say just need some time here. Okay, the stocks aren't really making 52-week highs right now. There's still a lot of pressure, but ultimately this still looks really good. Got it a little rejected right there by this resistance, but overall, see how it handles this. I would just give it some space here. If you're a macro investor, I wouldn't really worry. If you're a trader, not any really good setup right there. Facebook's trying to hold around. It too, if you want to take this little wedge out of the way, you can almost turn this into a channel now where it's really still acting very well, holding higher. It just not, a lot of momentum out there right now to take it to new highs. Stock looks good. Something if you were still holding it from a macro basis or even a swing, just be in a little less. If it were to break this small ascending channel, chances are it would come back in, then it would need more time up here. But again, on the weekly, looks really good. Look at this weekly cup and handle pattern, upper flag. But again, nothing's really breaking out right here, and the market's having a hard time finding its footing. XLF put a red dog reversal in yesterday, and then today, let's go to the daily. I guess it held it, but still not much continuity. Okay, you look here, it pushed through and then came back in. Goldman Sachs made lower lows. Bank of America was pretty strong, but again, market is having a hard time. So the banks could see another move to just say this area right here, which is the 100-day. Okay, some of the banks are already at their 100-day, like something like just say Goldman Sachs. You had a red dog reversal. This is just something good to know. Okay, yesterday it was a good trade. Okay, came below, came back above. Sometimes you get a day-and-a-half trade. It didn't. So if you had a trailer left over, and once it broke below yesterday's low of 157.78, here is your out. That is your stop. And then you figure it out again, and we'll see how it deals with this 100-day. So what's important here, once again, if you come back to me, is your time frame. Your time frame. Where are you trading? Are you a macro investor? If you're a macro investor, putting monthly funds into a 401k, 529, whatever you're doing, you know what? You've went through these type of time periods in the past, right? Even if we have 1987, which I don't think we have, or 2008, as long as you stick to your monthly inflow plan, at some point, if with a longer term time frame, you're going to be okay. If you're trading intermediate time frames, which is really my sweet spot, this is a time to be a little hands off. You had your time to pretty much take risk down at 1698, a time to be short when we broke that head and shoulders top pattern. And now it's like a hard short, and it's also a hard long. So what does that tell you? Low gross, low net. And that's a way to go about it. The TBTs, if you still have it in the drawer, congratulations. It tried to pull in, didn't get much traction, still above the 821, and this is what added some pressure on the market today. Still looking higher. Let's go to the weekly. You'll see that there's still a lot of room here. Okay, this was one level it had to get above and stay above. Remember the 70? That was a swing area long. Look at how it went above resistance. Now it cleared another area and it's trending. I guess what is this? This is 92, 88 to 92. Why not over time? Okay, I do still expect a 3-handle plus at some point by 2014 or the first quarter of 2014. Anyway, there are things to do, but sometimes you don't need to do them with any type of size. When things are uncalculated, why push it? Especially considering it's August 21st. Lots of people, including myself, are going on vacation. Mark's going on vacation. I know guys that have been on vacation for 2 weeks. If you have a great year going, just pull back the reins. We had a great July through earnings seasons, a lot of activity. We're up 19% going into this month, and now we've pulled off 2.5%, but we also had good action in some of the high beta names where the pullback didn't affect them. So at this point, when there's no clarity, just make sure not to be in harm's way. There's no need to give back money. Wait till we have more defined situations and volume, and then you could start to add some tier sizes, add some more positions, and just figure it out with a bit more ease versus being frustrated at a time when you're supposed to be relaxing, heading to the beach, heading to the mountains, doing things with your family and your friends, because you got to recharge those batteries, because I'm sure the fall will have lots of opportunities starting in the September after Labor Day. So with all that said, Fed days are tough enough, and they're even tougher when you're in the midst of some type of corrective activity. So hopefully, you kept your low gross, low net. You honored those pivot areas, which we talked about, which we did close below. If we gap up tomorrow up 8 handles, and you sold your positions because we closed below, 164.74, do not be upset. Don't be upset. Okay, you didn't take the risk, and it was the right thing to do. And the more times you do the right thing, the higher the probability you will have success. So it's Wednesday night, hump day, hump day. I'm gonna put that commercial in there. Tomorrow's Thursday. We're almost at the weekend, and just make sure you're doing what you have to do to keep yourself moving forward. And Scott Redler, T3 Live. See you at the recap. Well, not see you at the recap. We just had that. That's how long this day has been on a Wednesday. Woohoo! See you at the morning call, Brittany. Have a good one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.